All right, guys, we're back with another video here. Thank you so much for tuning in. Today, we're going to be talking about, are we in a housing recession? And we're going to be talking about the cities that are most at risk for a housing recession should the market continue to see inflation and rising interest rates and just everything that's going on with sales falling. There's a lot of stuff that we've been talking about here on the channel, and this is going to be no different. We're going to cover two different articles here. I'm kind of going to just blow through these a little bit quickly just to kind of get to the point of what we're seeing here, and also to kind of provide you two different points of perspective, and then also give you an idea of what you should be doing if you're looking at the market thinking, hey, I might want to buy, or I might want to sell, or I'm looking to invest. If that's the situation that you are in personally, then this is going to be really helpful for you. Let's go ahead and jump into my computer screen here and take a look at this new article that just came out. Are we in a housing recession? Economists are split on what's happening. So economists can't agree on this, and it says that they're split on whether to go as far as calling it a housing recession. I'm just going to jump through these highlighted sections that I've got here. It says that housing is a leading indicator of the broad economy. I would say housing is in a recession, and that likely means the rest of the economy will be in a recession soon. That was according to Lowe, some economist, right? So there's a bunch of information here. I'll link to this down in the description box below. If you're interested, you can kind of go through this whole thing, but I wanted to kind of point through, so a couple points here and just give you kind of my thoughts on it as we go. It says we are seeing weakness right now in the major housing indicators, and we expect the residential sector to be a drag on GDP growth over the next several quarters, but we don't declare on the basis of that the housing market is in isolation, is in recession. Richard Moody, Senior Vice President and Chief Economist at Regions Financial Corporation, agreed. I'm not really sure what it means to say the housing market is in a recession. So you're kind of getting these two different points of view here, and it's kind of interesting to see that that's what's happening. This goes on to say, so while the market has slowed from heightened demand amid the pandemic frenzy over the past 2 years, demand has only tempered, not disappeared. So perhaps the market is simply normalizing, Moody told Market Watch, rather than collapsing. I highlighted this in a different color because this is something that's actually really important. We are seeing the market go back to normal times. Now, if you go back to 2019 data, you'll actually see some comparisons that look very similar. Two things that I want to point out is actually going to be days on market. If you look at days on market in 2019, we saw double digits for most of that year, right? You're looking at somewhere in like the mid-teens, even the low 20s, depending on the time of year. We are now going back to that where it's going to be very normal for a home to sit on the market for 2, 3, 4, 5 weeks before getting an offer and then going under contract. That's going to be very normal in this market that we're going into. The other thing I want to point out is the ratio at which homes sell based on their listing price, right? Back in 2019, it was common for a home to only sell for 98 to 99% of what the listing price was, which is again very similar to what we're seeing here today in this market. That means that if you've got a home, for instance, listed at $500,000, you're going to be selling that home for somewhere between like $480 to $490 on a median basis, right? Median and average is pretty similar, so I'll use those words interchangeably, but that ratio is going to be pretty similar back to those normal times. So talking about the article here, it says, hey, perhaps the market is simply normalizing. I think that's completely correct. If you actually look at this information, it's just such a drastic change from where it was, but nobody expected that to continue on forever, right? It had to stop at some point, and now it finally has. So let's jump over to this other article and just take a quick look through this as well. This one says these cities are most at risk of housing downturn if recession hits. So this is a separate article that was just posted. I'm talking about some of the cities that are poised for the biggest potential downside if we do go into a recession. Just stick with me. I'm going to cover some information here at the end of the video that I think will be really helpful for you. And before we do that, if you are thinking about making a move here, maybe you live out of state, or maybe you live right here in our own backyard of Utah already, and you're looking to buy, sell, or invest in real estate, reach out to me. I love hearing from you people. I want to be your trusted real estate resource when it comes to Utah real estate. My team and I service the entire state, and we've helped people from all across the world move here, and also a ton of people, over 100 people in just the last couple of years, make a move right here locally. So we'd love to help with you as well. My information's on the screen. Reach out to me. All right, so jumping into this article here, it says cities where home prices soared highest during the pandemic housing rush are most likely to see the effects of a housing downturn amplified and home prices decline if the U.S. economy hits a recession. At the top of Redfin's list are what the real estate site called popular migration destinations or housing hotspots where many Americans set free by remote work relocated. The number one city most at risk, Redfin reported, is Riverside, California. This is pretty interesting. And I don't think it's any surprise that, the markets that went up the most also have the potential to come down the most, especially when you look at it as a percentage, because if something goes up 100%, for it to come down 50% 50% is not as surprising, whereas something goes up 50%, 50% from there is really only 25%. So that doesn't, that doesn't surprise me, and I don't think it should surprise, anyone else. To those paying attention to the housing markets in the West, a familiar city has been flagged again as a risky area, Boise. This is something that we keep seeing. We see a lot of people, a lot of these reports and articles and stuff saying, hey, Boise is a super high risk. So if you're looking at Boise, Idaho, definitely take that into account. It seems like the consensus on Boise overall seems to be very congruent. Everybody's kind of like, hey, Boise's a super high risk, but Utah is going to be a little bit different. We're actually going to take a look at this. Hey, real quick, guys, I want to tell you about the new newsletter that I'm going to be releasing here in the next little bit. If you want to sign up for it, go and click the link in the description box below. You'll just need your name and your email, and you'll be signed up for that newsletter. Now, this is going to be a newsletter that goes out every, probably 2 to 3 weeks or so, and it's going to have some information about what's happening in Utah, what's happening with the real estate market, what's happening with interest rates, and just kind of some information about the market overall. So if you want to sign up for that newsletter and be a part of that, make sure to click that link down below, and let's get back to the video. So here's how the top 10 cities ranked. Where do you think Utah is going to fall on this, or even just a city in Utah, right? Well, if we scroll down this list here, you're going to see that none of the cities here in Utah made it into the top 10, which is actually pretty surprising, right? So again, based on how they are using these metrics and stuff, that's how they come up with the score. If we scroll down a little bit further, it actually talks about where Utah ranks. The Salt Lake City metro area did rank in Redfin's list at number 21. At the number 21 slot with a risk score of 57.7. So it's not like we're out of the weeds completely, but we're definitely not up there. I mean, there's other areas like Boise or Florida, Las Vegas, Sacramento, Phoenix, Tampa, Tucson, Arizona. There's a lot of other cities that are potentially at a higher risk to see home prices come down substantially. That's a more optimistic ranking than Boise, but still high compared to other metro areas. And that's even though Utah ranked number 1 and Idaho number 5 in a recent CNBC report on the most stable housing markets in the US. That's another video that I did, or another article that I did cover. We talked about that here. And if you've been watching this channel, one thing I'm going to talk about here in just a second, but I just want to touch on it right now, is that nobody really knows what's going on, right? People are going to say, no, things are fine. Other people are going to say things are burning. Nobody really knows what's going on. So you have to look at it. You have to look at the facts. You have to look at what the best situation is for you and your, for your family, right? It might make sense to sell a home right now. It might make sense to buy a home, or maybe it makes sense to do neither, right? Maybe you just sit on the sidelines, wait a little bit longer, or maybe you just keep your home and don't sell it, right? You really have to make that decision for yourself to come up with the best solution for your family and kind of your family's needs. So let's finish out this article, and then we'll talk a little bit about that further in depth. In Utah, however, local housing experts say that the state's market is more stable and not likely to see dramatic price declines because Utah, with its rapid population growth and strong job market, has a history of healthy economy in relation to the rest of the nation. Yeah, that's very true. That's something we've seen firsthand. It's pretty crazy. Plus, Utah has faced a crushing housing shortage for years now, which was driving home prices higher even before the pandemic rush accelerated the market. Housing experts here expect home price growth to decelerate and stabilize, but not drop dramatically. Slight price drops, however, could be a possibility if the Wasatch Front continues to see falling sales for at least 18 consecutive months. June marked the 13th consecutive month, and July is likely on track to be the 14th. So this is pretty interesting here to see, because they are saying, hey, falling sales, that's the number of sales that are happening. July, we already talked about this. July was down substantially. If I remember off the top of my head, it was about half of what the sales were last July. So July sales year over year are going to be down, they're down a ton. You're going to see headlines, across the nation saying home sales are falling to all-time lows. You're going to see all these big scary headlines, and it's kind of true. Yes, home sales have fallen. That doesn't mean that prices have necessarily fallen as well. It's just the number of transactions has kind of dropped off, but I do actually expect that to come back here in the next couple of months, because interest rates, at least at the time of this recording, have continued to, or have actually come back down a little bit. They're, I've seen people locking in at 4.8, 4.5. I've even seen one at 4.25. So there's still opportunity out there. It just depends on which lender you're working with. You can still get, pretty decent interest rates out there. So with that being said, guys, I just kind of want to go back to what I was talking about earlier, you know, figuring out the best situation for you and your family. You might be in a position where you're thinking, hey, you know, let's buy a home right now because we just need to get out of mom and dad's house. Or you might be thinking, hey, we're moving into the state. We need to buy a home because we're going to be there for 3, 4, 5 years. We're looking at it for the long term. It might make sense for you to purchase a home rather than wait. The other thing you have to keep in mind is that even if prices do come down, if interest rates continue to climb, which I think there's probably a 50-50 chance they could at this point, at least over the short term, you know, if interest rates continue to climb, even if prices come down, you're still going to end up paying the same or potentially even more than you would have if you just locked in today, even at this, you know, the prices that we're seeing. So if you're really playing the long game, if you kind of have faith in the real estate market, then you're probably going to come out okay as long as you hold on to the property for the long term. The one thing I see over and over and over again is the people who don't own real estate or maybe only own one property. They're the ones saying, no, the market's falling, it's going to crash, you know, home prices are going to drop 50%. And, you know, they're kind of the crash and burn type people. Whereas the people who own real estate, you know, they own their own home, they own some investment properties, they own commercial property, whatever. They're all kind of thinking like, no, you know, real estate's great. We're going to see prices continue to climb into the future. And, you know, sure, maybe there's not as many deals out there right now, or maybe we're kind of at the top of the cycle. And sure, prices might come down 5, 10, 20%, but in the long term, real estate is still going to win. So it's kind of, you have the two different sides of, you know, the aisle where you've got people, you know, crash and burn, and then you've got other people over here saying, no, the market's, you know, sure, it's a little bit turbulent, but it's going to come out ahead in the long run. So with all that being said, guys, I hope you enjoyed this video. If you did, give me a thumbs up, share this video with a friend or a family member who's also interested in this type of content. It would really mean a lot to me. And also don't forget to reach out to me. I want to be your trusted real estate resource when it comes to buying, selling, or investing in real estate here in Utah, or even building a new home. We work with a lot of new construction as well. So reach out to me, call, text, or email anytime. My information is here on the screen, and it will be in the description box below as always. With that said, catch you in the next one.